Suzann Silverman, Editorial Director of Commercial Property Executive, and I'm here with Revathi Greenwood, the America's Head of Research for Cushman Wakefield, who has just provided the NARI conference here today with her outlook for the commercial real estate. Thanks very much for joining me, Revathi.
Thank you for having me.
Well, I'd love to talk with you a little bit more about what you were speaking about. If you could outline for me the red flags that you see for the commercial real estate industry.
Absolutely. The outlook for the commercial real estate industry for 2018 is strong. But as always, there are things that we watch out for. The first thing is obviously the stock market valuation. Stock market today is at an all-time high. And a lot of the consumer spending is driven out of the fact that this is boosting people's 401ks and their pensions. So that's one thing to watch out for. The second thing to watch out for is all the uncertainty due to policy in Washington around trade, around NAFTA, around immigration policy, which doesn't create certainty for the business community, and that has a knock-on effect on real estate decisions. And the third factor that we are watching out for is an inverted yield curve. So as you know, the Fed raised interest rates yesterday. It's already raised interest rates twice this year. We expect 2 more interest rates to happen by the end of this year. And the inverted yield curve, which is a differential between the short-term interest rates and the long-term interest rates, when that inverts, that has been a predictor of each of the last 9 recessions. There was only one time when the yield curve actually inverted and there was no recession. So we are watching that very, very closely. We don't think that it's going to invert. The forecast right now is that it will probably, the spread will narrow, but not invert.
What are the growth areas that you see out there?
So the growth areas in terms of asset classes, it's very much industrial and multifamily. Mm-hmm. Industrial is being driven by the growth of e-commerce, and also by Amazon's dominance as a delivery and supplier of goods. Multifamily is also growing, and as you probably know, we did the population barbell, which says that the millennials is the largest population group we have in the U.S. today, and as they are approaching, as they are leaving colleges and they're approaching home buying age, that's kind of boosting sort of demand for homes, demand for renting, etc. I think in the office segment, demand is really coming from 3 or 4 key segments. One is technology, one is financial services, which is rebounding finally after the 2007-2008 financial crisis. We're also seeing a lot of growth from business services, and finally from health and life sciences.
So your key takeaways for the industry?
So the key takeaways for the industry is that right now we're in a good spot. We're in a Goldilocks economy, not too hot, not too cold. 2018 is going to be a strong year, but we see a slowdown in that growth. Most people are thinking defensive, and defensive doesn't mean that they're staying out of the market or they're being negative of the market, but they are just trying to mitigate their risk. The good news is there is a lot of money on the sidelines waiting to be invested in commercial real estate, and even though prices are high, I think the wall of money that's sitting on the sidelines provides a natural flow to commercial real estate assets. In terms of opportunity for growth assets, people are looking at the Sunbelt area of the country, and the growth areas for Sunbelt are areas like Las Vegas, Atlanta, Miami, Dallas, which are seeing a lot of migration, but also growth in millennial population.
Well, thank you very much for sharing this with us.
Thank you.